Hello, today in less than 5 minutes, K&G International Advisors will give you a summary of last week's most important international financial news. This is part 5 on our series of how to invest for the long term, titled Investing in Health and Wellness. Last week, as part of our ongoing series on long-term investing, we introduced the idea of going up the value chain. To summarize, we think investors who want exposure to long-term growth themes in the global economy, like climate change mitigation or artificial intelligence, should beware of investing in the more obvious frontline businesses exposed to that particular trend, which can then often be overcrowded and so overvaluated. Typically, the least crowded and most interesting investment opportunities when investing in structural growth trends are discovered by mapping out and searching for investments within the broader value chain of the relevant industries. These processes of building out a universe of businesses with differing exposures to the same trend can uncover diverse and appealing long-term investment opportunities at much more attractive valuations. This week, we can apply this methodology to an investment theme which touches all of our lives, quite literally. Human health and well-being is undoubtedly one of the most important of the investment trends we reached at Dominion Capital Strategies. There really is nothing more important than the health and happiness of our friends, family, and fellow humans around the world. This is also a trend of extraordinary magnitude, with many sub-trends converging to create a global megatrend which is transforming billions of lives. New and emerging medical technologies to treat diseases, aging populations, emerging markets, and increasing global wealth, changing cultural attitudes towards wellness and mental health, the utilization of existing technologies to improve quality of life. All these seismic changes in the world are happening at the same time and translate into a structural investment trend that investors can gain exposure to. That of the people around the world living, on average, longer, healthier, and more meaningful lives. As investors, we can be part of the solutions to many of these problems standing in the way of all human living long, healthy, and fulfilling lives. When you buy shares in a business that is, for example, offering genetic testing services to help detect and treat cancer, or a company engaged in early stages of research to discover new drugs to treat dementia, you as an investor are supporting that business via your capital allocation decisions, effectively providing the capital base of those companies to continue investing in their services and technologies. As capital allocators, we really can change the world in a positive way by allocating investment to businesses facilitating this change. Mapping out the value chain in the global health and wellness trend is especially interesting since we are, by the very nature of this trend, having to look at everything from frontier technology in genetic medicine to business involved in looking after health of pets. Robotics companies researching and developing ways for people with disabilities to be able to walk again, businesses who provide the services to correct eyesight problems, suppliers of high-quality services to care for the elderly, education providers training the next generation of doctors and nurses, even the manufacturers of the components used in vaccine production. The value chain we gain exposure to by digging deeper into the theme of human health and wellness is incredible in its scope and breadth. As people live longer, their need to access healthcare and wellness services increases. As populations live longer, the trend of aging population supports structurally rising demand for related healthcare products and all of the services that make up for the wider value chain already discussed. This is a powerful and predictable driver of an investment trend, and it is self-reinforcing too. As current and emerging technologies help people live longer and healthier lives, it prolongs their lives and thus increases future demand for health and wellness. This positive feedback loops in a powerful driver if investors can gain exposure to it for compounding returns on investment over the long term. Having some portfolio exposure to this theme also offers an additional risk mitigation benefit. The demand for health and wellness has a low income elasticity for demand and is often subsidized by governments. This means that during periods of macroeconomic uncertainty, as we are currently very much living through, the demand of the healthcare and related products and services is often largely unaffected. If someone is diagnosed with an illness, they are going to seek out for the best treatment they can find, and it will increasingly often be an insurance company or government paying. And so the relevant service of treatment remains in the demand, whatever the economy may or may not be doing at the moment in time. It therefore makes a lot of sense for investors to look at the portfolio and ask themselves, am I appropriately exposed in this trend? Given the ongoing uncertainty for the global economy going into 2023, it makes even much more sense for investors to ask themselves, should I make exposure to this trend a core investment position for my portfolio over the next 12 to 24 months? Not just to gain exposure to one of the most exciting growth themes out there, but to also help my portfolio weather a volatile and uncertain outlook for the global economy. The sources used on today's video were Dominion Capital Strategies, Yahoo Finance, Bloomberg, and MarketWatch. My name is Juliana Lato from K&G International Advisors, and we wish you an excellent start of the week. We would like to thank you for watching our video. Don't forget to subscribe to stay updated on all the important financial news, and don't hesitate to contact us if you have any queries or further comments.